One of the trickiest things with ledgers is learning how to balance them. What does that even mean? Well, we've got an accounting process here. So it says the first thing that happens is there's transactions that happen every day, and all those transactions will have source documents. Stage 2, we've learned that we've got to record all these transactions in the accounting system, and where we put them is in something called the general ledger. And all the general ledger is a series of ledger accounts, and each account that the business has, every asset, liability, owner's equity, revenue and expense, will have its own ledger account. Then, at the end of the month, we're going to do some reports, an income statement, a cash flow statement, and a balance sheet. And then finally, we need to be able to analyze these reports and make decisions. So now we're kind of looking at this third step here and saying, well, at the end of the period, I know I've got to make a balance sheet, right? So I've got here, balance sheet at the end of January, current assets. So let's look at this cash one. I've got to put an amount in for cash here. But I can see my ledger has like a whole bunch of transactions in it. So I guess like looking at that, it's not clear what the balance of that ledger is. How much cash do I actually have? So what I need to do is balance this cash ledger so then I can go and put it in the balance sheet here. So how would I do that? Well, every teacher sort of does it differently. We're going to go with these 5 steps. Okay, so step 1, figure out which side has the larger amount. Is it the debit or credit side? Now, for most accounts, it's either going to be one or the other every time. So for example, a loan is always going to be a liability. It's always going to have a bigger credit balance. But for cash, it's actually one that can have a debit balance or a credit balance. And that's because sometimes your bank account can go into negative, which is called an overdraft. So to be safe, we always just want to go, well, which side's got the larger amount? So if I add up all these debits, I'll get 70,000. And if I add up all these credits, I'll get 10,000. So in this case, this has got a debit balance. It's going to have a debit balance of $60,000 because there's $70,000 of debits and only $10,000 of credits. So what does that mean? Well, it means I've done step 1. I've figured out which side has the larger amount. Let's go to step 2. Write the largest total on both sides of the ledger. You might need to leave a blank row, it just depends. But what I'm going to do here is say, well, the biggest total was 70,000 on the debits. I'm going to write that here. Okay, I left a blank row. Sometimes you do, sometimes you don't. It just depends on how much room you have. I'm going to write that there. Now, I also got to put that on the same line on the other side. It's really important. Take marks off in the exam if this is not there. And what that's telling the person reading it is that this side adds up to 70. And this side will add up to 70. It doesn't yet. It only adds up to, what's that? 3, 4, and 3. That's 10,000. So we're missing something here. But that's step 2. Write the largest total on both sides of the ledger. Step 3. On the smaller side, write in the difference between its total and the total of the larger side. What does that mean? Well, on the smaller side. So in that case, that's this credit side here. So the total of the larger side here is 70. Now I'm going to minus away these numbers, 3,000, 4,000, and 3,000. And I'm going to get a total of 60,000. So step 3 says on the smaller side, write this number in here. Okay? And the reason why I'm doing that is because this side now equals 70,000. If I add up 3,000, 4,000, 3,000, and 60,000, I get 70,000. Step 4. What do we do now? It says write in the last day of the period, and the word balance is the cross-reference. So the last day of the period in this case is the 31st of January. I'm going to write the word balance there. Okay? So, well, I guess what we're saying is at the beginning of January, the balance here was debit, 25,000. And now at the end of January, on the 31st, the balance was 60,000. So that is how much is actually in that cash asset. Now, once upon a time you were done. That was it. That was balanced. But what we need to do is we need to tell the person looking at this that this actually will now be the balance for the first date of the next period. So for February. So that's step 5. We need to what's called carry down the new balance for the first day of the next period. So we go down here, we write the date, we write 1st of Feb, balance 60,000. So we kind of see this balance here, 31st of January, balance 60. We're carrying that down on the first day of the next period. And that's how we balance ledgers. So it doesn't matter whether it's an asset or a liability or an owner's equity account, we'll follow the same procedure. So there's those 5 steps. So get that down in your notes and then come back to this video whenever you're having trouble figuring out how to balance something.